Huw, let's start off with you. When you look at this sudden move, are we actually really going to see a hike in interest rates in the UK?
I think the case for a rate hike is quite strong. I think the Bank of England's behind the curve. And I think actually the rate cut they made last August really was a policy mistake in retrospect. So with a 40-year low in unemployment levels, and with inflation way above target, I think the case for at least eliminating that emergency rate cut is very strong. Okay,
well, this is actually crucial, right? It would be eliminating that emergency cut and not actually, starting normalizing rates.
Yeah, I mean, I think that if we look at the inflation picture, we know that some of this is sterling and some of this is temporary, made more temporary by the move in sterling recently. So we're not trending into some kind of wage price spiral. This isn't the 1970s. On the other hand, the economy is performing relatively well. Almost without question, the ONS data is wrong because it's the ONS, and it will be revised higher. And the Bank of England knows this. So we've got reasonable growth, you've got full employment, you've got inflation above target. What's a central bank going to do? Well, they're going to raise, of course, if that is something they see continuing.
Let me go to two charts here. Francine just put up the sterling chart as well. I'm sure she'll go to euro sterling here in a bit. This is the intraday chart, BOE, there with the red circle 2 days ago, yesterday almost, and then up we go to stability, and then with a new leg up to a 135.35. And then I can come over here. Thank you, Justin Chart Banner, for making this all work, to a chart that we've used a lot, which is sterling and Brexit with a red circle the morning after Brexit. And, Huw, I would suggest that business has to adapt to that. We're thrilled to have both of you with us, Huw Van Steenis with a banking view and Paul Donovan more with economics. Huw, what does a 135 sterling mean for the city in London?
Well, look, I think the weak sterling has not been as good, actually, for exporters as I think many traditional policy makers would have liked to have seen. So I think, actually, a strengthening currency is most importantly to try and choke off the high inflation. And I think also with the government now having caved to inflation demands for the public sector, I think that's also another trigger that the Bank of England has to take very seriously. So I think this is a net positive.